And this program is brought to you by Hypack Services. And Hypack is an entrepreneurship, leadership, and business strategy consulting and coaching firm. Our main focus is to empower owners and CEOs of small and medium-sized businesses, including startups and entrepreneurs, with ideas and tools and strategy that they can help them to build and manage their business in a way that will be very profitable and, most importantly, to make money for you and for the people that you want to serve. And tonight we are talking about break-even brilliance, mastering the numbers that drive profit and build sustainability. I mean, what we are talking about is that one of the very critical numbers you need to know in your business is called break-even point. And that's what we're talking about. And for many of us, if I do a poll right here, right now, many of us will confirm the fact that one, we may have not heard before, or even if I've heard it before, you don't know how its implication for businesses. And then number three, for those who know it and knows their implication, for some people also, it's even difficult to even work it out in the business, let alone to understand how it can benefit their businesses for them to build very thriving businesses. So tonight, I want to do justice to that. But just before I do that, I want to put a disclaimer. I am not a chartered accountant. I am not a chartered accountant. I have gone through accounting studies. I've gone through financial management studies. And based on what I do, I've interacted with a lot of seasoned accountants, seasoned financial analysts, and seasoned successful professionals who have guided me up to today. That has given me a lot of insight and knowledge as to what I can do to understand and also teach my clients what it means to understand the break-even point. If we have to bring an accountant to do this for us, I'm sure my approach might be a little boring. They might have a little different route which they will take to do that. But I want to take how I understand it to be and how we have applied it with our clients, and it has worked for them. And also, I want to see how I can help you also do the same thing in your businesses. So please, I'm not a chartered accountant. Today, I'm pretending to be a chartered accountant. If you agree with me and you allow me to be your accountant for tonight, please type in the chat box aloud before I continue. Please type in the chat box aloud. No, don't type aloud. Type permitted. I think I like the word permitted. Right, type permitted in the chat box. If you have permitted me to be your accountant for tonight, please do that for me. Type permitted. Permit me before I do what I want to do tonight. Please do that for me. So that no accountant come to beat me up and say that I'm taking their job. I'm trying to come into their space. Yeah. So thank you all very much for giving me the honor to be your accountant for tonight. All right. Nice. So last 2 months, I had the opportunity to meet about 13 different clients. 13 different businesses. Most of them, about 60% of them were females, and the rest were males. One of the things we were talking about at the time was to understand the numbers in their businesses. And for every small business, there are specific numbers that you must know. They must be at your fingertip. You should be able to call them out just like at any point in time when anybody asks you about it. And I think one of these episodes, I'm going to take my time to talk about these critical numbers that every single small business owner must know. For the big companies, they know, because there's a chartered accountant, there's a professional accountant in that organization who now takes that part of the business and run it. So even the CEO might not do that calculation himself, but the financial manager or the accountant would be able to tell the CEO these critical numbers every single month, every single week, every single day. And it's based on that they're able to build a very successful business as big operations. But unfortunately for our small businesses, we have to find a way to understand these numbers, to be able to apply them in our business in such a way that we may be able to start and manage our business in a way that will eventually help us to grow. One of those critical numbers that every single entrepreneur, every single business owner must know in your business is called the break-even point. So during the session that I had last month, that was the example that I was giving, I asked the people, the participants in the room, how many of us have a sales target? Do you have a sales target? Do you have a goal? Do you have a number that you want to achieve every single month? My dear friends, let's put a number in the room at 100%. Out of the people who are in the room, only 12% of them could tell me exactly what the exact sales target was. What exactly is the number they're looking for every month? So when they open their business from the 1st of the month to the 30th or 31st of the month, what volume of business do they want to achieve as a business per month? Only 12%, my friends. That caught me thinking, because if you are in business and you only open your shop every single day just to go and sit there and try to sell something and hoping and praying and wishing that somebody's come to buy, and if they buy more that week, that month, you clap for yourself. If they don't come and buy more from you, you cry because you think business is not doing well. That is not how we run a business. A business must be run intentionally. There must be some intentionality behind how you run a business. So After asking them how many of them know their sales numbers, and many of them did not know, they were just wishing and hoping and guessing something. I went to the next point. I asked them how many of them in the room knew exactly how much it cost them to operate their business every single month. Either they make sale or not, what is the cost in their business that they have to pay for every single month? In fact, some of them did very well. Most of them were able to tell me about their salaries for their workers. But they could not tabulate for me total amount as to how much money they need to actually pay in that business or generate in that business to be able to pay for that cost. So that nothing at all, they should be able to stay in business without any problem. That also got me very worried. Number three, that I asked them. I asked them that number one. Okay, so the first question I asked them was one, if they knew they had the sales target, if they had the revenue target, the revenue goal that they're supposed to achieve in every month. Number two, I asked them if they knew exactly how much it costing them to stay in business every month. That one they did quite well, but again, there was a big issue with it. The third question that I asked them again was that for every single product that they sell, do they have an idea about how much profit they make from that product? That too was okay. Some of them guessed a bit. It was only one lady, Georgina. I don't know if you are on the call today. Georgina was very straightforward, very strong, very firm on that and said, TK, my profit margin is 13.78%. I was happy because amongst the many people, I could find somebody who understood a little bit about some of the numbers that they were supposed to know in their businesses. That gave me some hope. But again, that gave me a huge challenge to now sit up and see and ask myself, what can I do to help these 26 entrepreneurs in the room to be able to understand these basic numbers, especially concerning money and sales in the businesses? Tonight, I've come to help you. My desire tonight and my goal tonight is for us to at least know how much money we need to, how much money we need to, how much money we need to pay for expenses in our businesses. And we're going to work through that. Number two, how much is our profit margin? If we sell every single product in the company, how much margin do we need? How much money out of what we have sold is it for us as a business to spend? Because again, based on my experience and working with many entrepreneurs and small business owners, we spend from our sales. We sell a total of 1,000 Ghana cedis a month. We sell a total of 20,000 Ghana cedis a month. And we assume that all the 20,000 Ghana cedis is for us and we start spending. My dear friends, if you are doing that in your business, it is totally, in fact, it's suicidal mission you are on right now. It is a disaster. Is that the disaster for your business? Don't. That is not how we run a business. The total volume of sales you made, or what we call the revenue that you make in the business, is not all for you. In that sale is your chicken. In that sale is your egg. So if you made a total sale of 20,000 cedis in a month, part of that 20,000 cedis is egg that chicken has produced for you. And that 20,000 Ghana cedis includes also the chicken that is laying the egg for you every single month. This is something we must understand. And my duty tonight, as your chartered accountant, as a coach, as your business consultant, is to guide us in the simplest way, not the high-end PhD chartered accountant mode. Of course, I'm going to mimic what they do to help us, but I'm going to see how I can break it down in such a way that we'll be able to understand it and apply it immediately into your businesses. So one thing I'll ask all of you to do is please find a notebook. And let me say this, one of our friends did something that really touched my heart. Last week, she called me and said that she actually bought a book last year just for the Thursday program. And at the back of that book, she had written, Built to Last, Thursday, 7 to 8 p.m. I said, wow, I was so impressed. This person has dedicated a full notebook for this course every Thursday. If you have one, please clap for yourself. If you don't have one and want to journey with us every single Thursday to learn how to build a business, I would beg you, please find a dedicated notebook. This is my notebook. This is what I use every Thursday, and I'll show you. This is mine. If you can see a lot of things in here, this is what I do. This is my notebook. Okay, this is where I prepare my notes from. And when somebody is also coaching us in a particular session, this is what I take as my notebook and I take notes. So please try and do that. So what I'm saying is that if you are going to be with me tonight and understand what I'm going to talk about, very basic, very simple, please get your notebook, get your pen, and get your calculator. If you don't have a calculator like I'm having here right now, please make sure that you have opened your phone calculator and let it be on, because you're going to work some numbers. All right? Good. So 3 things I want to do. Number one, I want to define what break-even point is in the simplest TK's mode, not a chartered accountant mode, simplest TK's mode. Number two, I want us to determine how much profit we make in our business per every sale that we make. How much profit do we make? How much money after the sales you have made is for us to spend in the business? And number three, I would want us to understand the benefit if we really come to understand this break-even issue we're going to talk about, and how they can help you to now stabilize your business and eventually grow. And number four, most importantly, I would want to teach you how to do this and then apply it immediately in your business. If you are ready for me, please type in the chat box you are ready. Type in there ready for me if you are ready to go with me right now as I jump straight into our discussion. Please type ready in the chat box. Type ready for me. Thank you very much, Anne. Mercy, thank you all very much. Good. What we are talking about tonight is break-even brilliance. What is this break-even point in business? In a very simple accounting, simple business term, the break-even point in your business is at a point where your business have generated enough revenue, enough profit in your business that if you take that profit, it can cover for all the costs that are fixed in your business. This is where in your business, you have been able to determine the point at which your business generates enough income or enough revenue or enough profit, whatever term that I want to use it. And I said to you, I'm not going to go to too deep accounting terms, but I'm just trying to make it as simple as possible. How much profit that your business will generate, such that if you take that money out of the total sales you have made, you can use that money to pay for all your expenses in the business and still leave your working capital in the business without losing it. What that means is that at the point of break-even, you neither make profit for the business or nor make losses. And the account man will say, well, he say, I forgot how we say it. You are at the point where you are okay, you are stable. Wow, moka, that's what it means. You neither made profits nor you made losses. So, for example, if your school fees is say 1,000 Ghana cedis, and I gave you 1,000 Ghana cedis, what that means is that if you take that 1,000 Ghana cedis cost of your fees, and I give you 1,000 Ghana cedis as your income coming in, I would take the 1,000 cedis to pay for my fees of 1,000 Ghana cedis, and then I don't owe nobody. You don't owe the school, you don't owe me. You are okay. What I want us to understand today is that you must find a way to stay in business without losing your working capital. For me, there are three kinds of money every business needs. Three kinds of money. The first money every business owner needs is the money to start the business. You want to start a business, you need to know how much money you need to start, and there's a way to calculate that, what we call a startup estimate. Number two, you need to know how much money you will need to stay in business. So now you have started with a startup estimate, but running the business, you need money to stay in every single month, because for any business, it's going to take between 3 to 6 months from the time you start your business before you start making good money or good profit in the business to pay for your costs. So you must understand that if I start this business today, and in the next 3 months, I'm not going to make no profit, I'm not going to make no sales, how do I pay for my rent? How do I pay for my electricity? How do I pay for my water bill? How do I pay my staff salary? How do I pay for internet for my office? How do I pay for my subscriptions? How do I pay for fuel? These are costs that either you like it or not, you must pay for every single month in your business. You must determine that. And that money I call the money to stay in business. You are just staying in business. You're not making profit. You're not making losses. And then the third kind of money any entrepreneur would need is the money to grow. So now once you start and you're able to stabilize the business at a certain point, and to get to a point where you have been able to cover all your costs, you are making extra profit. And then the next point is that, can I open another branch? Can I expand my business? Can I buy more vehicles for distribution? Can I employ more staff? That is the point you are growing. But my dear friends, I will tell you, for the past 9 to 10 years, I've done this consulting business. Many people, many entrepreneurs that I've seen who have failed woefully, and some of them have become fugitives in their own homes, in their own towns, they have come to that point because they fail to understand at what point do I grow. The moment they started the business, they started seeing sales, started seeing money coming in. They thought everything else was theirs. They started spending, buying nice cars, buying plots, start building houses, doing all kinds of things. I remember one of my friends actually changed his child's school from average, a top range school a bit, and took the child to an international school paying dollars. My dear friend, my friend today is not in business. You know why? Because he was using both his profit and his working capital to be paying for $1 school fees for the child, which did not make sense to me. Today, he's not in business. And I've told you all the time that anytime that I see businesses that are collapsing, and they cannot figure it out what is happening and what they can do to change it up, it hurts me because I've been there before. It's embarrassing. It's disgusting. In fact, if it actually demean you, it makes you feel like you're not a human being. But you can't be a human being if you know how to run a business. And one of the critical things we are talking about now is the money to stay in business. And I'm talking about that point where we call the break-even point. So the break-even point, again, is nothing but the amount, at what point in your business that you are able to generate enough income to cover your cost. And when you cover the cost, you're not making profits, you're not making losses. So at that point, now, how do we determine cost? For the typical business, there are two costs. Costs have been broken down into two: fixed costs and variable costs. And in fact, if you open it up a little bit, the economics professionals would even add even more costs to it, what they call the hidden cost and all the other costs. I don't want to go there. Let's break it down to very simple: the fixed cost and the variable cost. So you are building up. So now we know what break-even point is, and I'm defining break-even as the amount of money or revenue or income that you need to generate in the business to pay for your cost. And now the cost we want to cover is what I'm trying to explain. And there are two types of costs we want to cover here: your fixed costs and your variable costs. But honestly, tonight, I'm very, very interested in the fixed cost. Because the variable, okay, let me explain the fixed cost and the variable cost. The fixed costs are all the costs that you must incur in your business, the expenses you must pay for in your business, either your business makes money or not. The moment you open your door as a business, the moment you're able to get some money to start a business, and then you are in business, you have a store, you have a showroom, you have an office like ours here that we work from. The moment that door is open, and then you say you're a business owner or you're a consultant like us, either you make sales or you don't make sales, either you get clients or you don't get clients. Me, sitting right here in my office, I have to pay rent. Number two, I have to pay for electricity. Number three, I have to pay for internet. Number four, I have to buy fuel in my car. Number five, I have to pay salaries and allowance of the people that I'm working with. And number six, you must make sure that if there are any specific subscriptions you pay for every single month, like for example, we have a subscription base for our accounting software, for example, we must pay for it every month, either we get a client or not. So that's fixed cost. It doesn't vary with either you get business or not. And every business owner must sit down and carefully think through this. And these ones are very easy to calculate. So for example, in our case, I pay rent. I know how much it's going to cost me. I pay salaries. I know how much it's going to cost me. I pay for electricity. We have an average about 400 Ghana cedis a month. I know how much it's going to cost me to pay for internet, 500 Ghana cedis a month. I know how much fuel I need a month, 2,000 Ghana cedis. These are specific costs that either I like it or not, my dear friends, I must look for money to pay. So in order to understand how much money you need to stay in business, as a business owner, at the layman's basic 1 + 1 = 2 level, you must sit down and ask yourself, how much money do I need to stay in business? What is my fixed cost? So I said that there are two types of costs. There's a fixed cost and a variable cost. Now, the variable cost is different from the fixed cost. The variable costs are all the costs that comes into your business as and when you increase production. That's when the business grows, you have to get more of that. That includes things like raw material for producing items, for example. So, for example, if you are a baker, and then for a baker, your fixed cost could include your rent, your electricity, your salaries for the workers, and all those ones. Your variable cost could be the flour, the oil, the margarine, the sugar, the egg that you use. If you produce 10 loaves of bread, the amount of flour, sugar, oil, and margarine you use will be different from the amount if you produce like 100 loaves of bread. So if you produce 10, you might maybe need 1 bag of flour, just an example. If you produce 100 loaves, you might need 2 bags or 3 bags. So as your production increases, your cost also increases. That's called variable cost. Now, if you are able to calculate the variable cost very well and add it to your fixed cost, that gives you a total cost. But today, let me just say very simple. Let's stay on the area of the fixed cost, which are the costs that either you like it or not, you must pay. In another episode, I'll try to put all that together for us to understand it better. Okay? So, if we take the definition of a break-even point, we are saying that the point at which you make enough revenue or enough profit to pay for your fixed cost. That's what I want to define it for now. So if your fixed cost, for example, is 10,000 Ghana cedis a month, how much sales do you need to make in order to make profit to be able to pay for that 10,000 Ghana cedis? That's what my interest is. Because if you are able to pay for your fixed cost It means you are staying in business. You are staying afloat. You are not losing anything at all. You are paying for it. So now, assuming that we are in September, September is just ending. Assuming that in September, we did not make no sales. Okay, no, let's assume that in September, my first cost for, let's say, hyper consulting services, let's say it's 10,000 Ghana cedis. If it's 10,000, and then I don't get any client at all this month, either I like it or not, that 10,000 must be paid. So if you don't make sales from Hypac, it means that I have to go and take my salary from Garden City University College to come and pay my bill, because that bill must be paid. I must pay my rent per month. I must pay my colleagues at work. I have to pay them. I have to pay for the internet. I have to buy fuel in my car. I have to pay for electricity. I have to pay for water bill. These costs are fixed. So my strongest interest tonight is that how do we determine how much revenue we need to make to cover this fixed cost in our business? And then once we are staying afloat, once we are peaceful, our minds are at peace, we cannot think about how do we now grow our business, increase our sales, increase our revenue in order to increase our profit so that we can now grow the business gradually. If you're understanding me so far, please type in the chat box, I understand. Please type it for me. As usual, I will always do this. I want you to be participating in this discussion. This is not for me alone. I want every one of you to participate in this. Please type in the chat box. So far, if you understand what I've explained, please type in the chat box, I understand. Please do it. Your participation matters to me and it matters to you. When you confirm, it means that we are on the same page. If you do it as well, it makes you active participant in the discussion so that we can all learn together and grow our business the way we want it to go. Good. So now that we know the definition of break-even point, at the point at which you make enough revenue to cover your cost or your fixed cost in your business so that you don't make losses or you don't make profits. And now that we also know the cost implication here, the cost being that there's a fixed cost and there's a variable cost, but at this point, we are very much interested in our fixed cost. So now that's established. The third thing that every entrepreneur, every business owner must know is for you to know your profit margin. You must know your profit margin. This is another question. Apart from the seminar that I had the last time, and I asked them this question, I asked them, another woman, a client of ours, I asked her, so take anything. It's a big issue, very big issue. Now, your profit is the difference between your cost price, the selling price, and your cost price, basic. I'm not going to go the higher, let's do the basic. So the difference between your selling price and your cost price gives you a profit. Example, and this is where I want to start doing a calculation. So please kindly take your notebook or your pen and your pencil and your calculator. Let's do some calculation. So we are going to determine what profit is, okay? Assuming that you go and buy a calculator for 50 Ghana cedis. So your cost price equals 50 Ghana cedis. And then you sold this calculator for 100 Ghana cedis. In order to determine your profit, you take the cost price from your selling price, which will mean that you are going to make it 100 minus 50. This will give you, again, 50 Ghana cedis. This 50 Ghana cedis is your gross profit. It's profit that you made out of doing that activity. So all the sweat you went through to get the calculator, the transport you took, all the sweat, all the trouble that we went through, you were able to now generate 50 Ghana cedis from the 50 Ghana cedis you invested in the calculator. That's your profit. Now, this is so important. It's going to help us to be able to calculate our profit margin very well. So please follow me. And as I told you, I'm not a chartered accountant. So if there are any accountant on the call now, please don't beat me up. If I make a mistake, please correct me. But I'm sure by the way I've been tutored, the way I've been told, the way I've been taught by my gurus, like Albert, like Ben, like Emmanuel Boache, the way you guys have, Isaac Boache, the way you guys have taught me, I know I'm the right track. So please stay with me. We are safe. You are safe, right? If you believe you are safe, please type in the chat box safe. Type in there, I'm safe. And I'll go with you. Type I am safe. All right, good. So now we know what profit is. Now this profit of 50 Ghana cedis, I would always want to express it in percentage terms. Because if you take the actual value as 50 Ghana cedis, it's okay. We can use that to calculate the break-even point. But if you convert that into percentage, it helps you to do it in such a way that when you have been able to calculate your whole total sales you made in a month, you can apply that percentage formula into the sale and get the total profit, gross profit margin you actually got from your business. So now let us attempt to convert this profit of 50 Ghana cedis into a percentage. And again, it's very simple. So we call it a profit margin percentage. Profit margin percentage. How do you calculate this? You take your profit of 50 Ghana cedis and then you divide it by your selling price, which is 100 Ghana cedis, and then you multiply this by 100%, right? So we are converting the 50 Ghana cedis into a percentage. So now we bought the product for 50 Ghana cedis, we sold this for 100 Ghana cedis, we made a gross profit in terms of value of 50 Ghana cedis. Let us convert this 50 Ghana cedis into percentage so that we can apply it anywhere. All right, so Martina said I should do it again. So let me just go slow a bit. So chartered accountant TK is speaking, so take cool. All right. So we want to calculate our profit. So our profit is calculated by taking your selling price and then subtracting your cost price from it. When you do that, you get your gross profit. The example we are making here is that we bought the calculator for 50 Ghana cedis, and then we sold it for 100 Ghana cedis. If you subtract the 50 Ghana cedis from 100 Ghana cedis, your profit would be 50 Ghana cedis. So all the effort you put in gives you a 50 Ghana cedis. Now, if you want to express this in percentage terms, which I want us to do, is that you take the 50 Ghana cedis profit, you divide it by 100, which is your selling price, and then you multiply that by 100. So the formula is this. Please write the formula down. It's your profit divided by selling price times 100%. Again, this is the simplest way I can explain this to you. And I'm sure if I bring Albert, or I bring Isaac Boache, or I bring Benjamin or Semriku on this call right now, they're going to go deep dive it. But don't worry, I'll bring them here one day. I want to just make you feel comfortable first before I bring them in to come and worry you. Now, if anybody has calculated this percentage, how much is it? Let me see in the chat box if anybody has been able to calculate it. Very good. Oh, wow, I'm seeing 100%. Oh, no, sorry, I'm sorry, 50%. Nice one. I like the way Felix actually calculated it. Just did 5.5 times 100 give 50%. Excellent, 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 excellent. Wow, my students are learning. So now I'm a good teacher. I'm a good chartered accountant today, only today for 1 hour. That's alone. Good. Now that you know that your profit margin is 50%, it means that as a business owner, every single item that you build, I mean, if you let's say that this one maybe is paid for just one product, for example. I'm only selling calculators, so you are applying to only one product. But if you are applying to different products in your shop, there's a different way of doing it, which I will talk about later on. But let's understand it basically by just selling one product. So that we are selling only calculator. It means that every single day that we sell 1 unit of calculator, our profit margin on that is 50%. This is important for you to know. Very, very important for you to know. If you don't get this, my dear friends, you will struggle and work so hard, but so soon you can't find the money, you can't find your stocks, you'll be in trouble. I've been there before and I know what I'm talking about. Okay? Right. So now we have established a couple of facts. Let me recap them again. Number one, we have defined what profit margin is. The point at which your business makes enough revenue to cover all your fixed expenses. And we have defined fixed expenses are the expenses in your business that either you produce or you don't produce, either you sell or you don't sell, either you get a client or you don't get a client, you must pay for those costs. And these costs we said include the rent, your utility bills, your salaries, your insurance, your telecommunication bill, your fuel, anything that you have determined to be something that must be paid for every single month by you is called fixed costs. You have to determine that. But some of them are very generic, like rent is very generic, telecommunication is very generic. Fuel for me is very fixed. I have to fix it there, okay? So we know the fixed costs. We talk about variable costs, but let's put the variable costs aside first. The next thing we have learned to do is to determine your profit, plus even the profit margin percentage. And per our calculation now, our profit margin percentage is 50%. Now the point is, why do we need to do this at all? Why do we need to struggle? Why do we need to worry ourselves to understand all these plenty jargons and English and all that? If you want to be an entrepreneur, a very successful entrepreneur, if you want to be a serious business owner, you must understand how to run a business. Business management is an art and a science. If you want to manage a business, it is an art and a science. It's a science because there's a formula to do it, and that's one of the things we are doing right now. It's an art because there's a behavioral side to it. There's some kind of innovation, creativity part of it, where you actually have to use your own creativity, your own thinking to see how you can figure it out. But the best way to run a business is to have the science basis, have the figures, have the facts, and now use your artistic mind, your creativity, to now juggle around the figures, the hardcore figures, to come up with a qualitative assessment of what has happened in order to make very good business decisions. So business is an art and a science. Number two, the reason why we need to understand this break-even point is that if you know it, it helps you as a business owner to set very realistic and clear, specific target or revenue goals for your business. If I know my break-even point, if I know the point at which I am supposed to make profit, I'm supposed to make enough income to cover my cost, which is my fixed cost, I'll be very clear in my mind what I know. So for example, the 26 guys that I met last month, that I asked about how much money they need to stay in business and if they have sales target and they didn't have it. If they've ever done this calculation, they would have known that this is how to go about it. But I don't think I've done it before. But thank God that I was able to help them, like I'm doing right here, right now. Number three, if you know your sales target, if you know this break-even point, do all this calculation, if you know it as a business owner, it helps you to be able to even price your product very well. Because the higher the price, sometimes we say the more revenue you get. But it might shock you to know that you can have very high prices, but because your fixed cost is so high, you may not be making no profit at all. For example, talk about the FMCG market, like our friends who are doing provision store, for example. Provision store, in a day, they can make huge sums of money. Thousands and thousands and millions of Ghana cedis a month. A company, a grocery shop, a provision store, or a supermarket can make like 100,000 Ghana cedis a day. But out of the 100,000 Ghana cedis a day that they made, I can tell you that their profit could be only like 5,000 Ghana cedis. 5,000 could be a dozen. Sometimes 2,000. So now if you are a cashier and you are sitting in front of the tellers, the counter, and you are collecting money every day, and you count the money at the end of the day, you saw 200,000, 500,000, and you tell the boss, you are making money, we are very happy. Hey, boss, you are making money. Your boss is not happy because you know what? Even though you have made 1 million sales in a month, his profit margin in his head is only 20,000 Ghana cedis. Once he knows he has made 1 million and his profit is 20,000, he's thinking about the fixed cost, the cost he has to pay, including your salary. So now he calculates in his head quickly and realizes, hey, my fixed cost for my workers, my business is 30,000 Ghana cedis. I sold 1 million, but my profit is only 20,000. How am I going to make up for the difference of the 10,000 Ghana cedis? So entrepreneurs are, let's leave it here. So once you know, it helps you to price your product well. And finally, if you know your break-even point, if you know at the point at which you know your profit margin and the break-even point and all that, it helps you that you be the business owner to now set realistic break-even point profit at the point where you break even plus making extra profit for your business. Because you're not in business to break even. You're not in business to pay for your costs and stay there forever and ever. No, you are in business to make profit in spite of all the risk. So those are the benefits you need to get. And that's why I'm taking my time for us to do these calculations. All right? So now we know what break-even point is, and we now know some of the key components of how to calculate the break-even. And then number three, we have learned about the benefit, the reason why you and I need to understand this for our small businesses. Now, let's talk about the final one. We are now going to do a proper calculation to now determine what our break-even point for a hypothetical business. So for example, let's take a business that sells calculators. This calculator businessman or woman, including all of you, let me use somebody's name here. Let me use, whose name should I use? Let me use, whose name should I use? How do you say name? I don't know which name to choose. Let me use Mary Azuma. Good, Mary, your name came up, so you're lucky. So, okay, me, Fusena. Okay, so I'm going to use Fusena, Mary, and who else? Let me use a lot of people, right? Good. So now let's say that Fusena and Mary are operating a business, or Martina, and then they are selling calculators. Mary, all these my business people, please write this cost down. We are going to look at their fixed cost, the cost that they need to incur every single month. I'm using an example. Number one, these business people are paying a rent, a fixed cost of 500 Ghana cedis. Fixed cost 500 Ghana cedis. Number two, they might pay for communication and internet. They need that internet and communication for the business every single month. So they pay 300 Ghana cedis a month. Fixed. You have to pay. If you don't pay, they'll cut you off. You're not in business. Number three, they pay utility bill, and utility have just put water and electricity together at the same time, so we don't complicate issues. So utility bill, they pay 300 Ghana cedis. And then, if they put all the salaries of their workers together, including they themselves, and I've told you in this call that every entrepreneur, you must pay yourself a salary. Minimum, you must pay yourself. So when they put their own salaries together, their own salary plus the salaries of the workers that they are working with, it totals to 2,000 Ghana cedis. Salary or wages, 2,000 Ghana cedis. They have to pay for insurance, monthly insurance of 500 Ghana cedis. And then these clients or these ladies who are making this business have to also pay for a subscription. They are subscribed to an accounting software. So they pay 400 Ghana cedis every month. This is the fixed cost of this business. So rent is 500. If you didn't get all, please write them down. Rent is 500. Telecommunication, which is communication and internet, is 300. Utility, which is water bill and electricity, is 300. Salary for all the workers in the business is 2,000 cedis per month. Insurance is 500, and subscription for the month is 400. Please add all together and give me the total. I have it here, but I want to see if you're working with me right now. What is the total? If you put all that total together, how much is the fixed cost of this business? 500 for rent, telecom 300. Very good. Pedita, thank you very much. Melinda, 4,000, 4,000, 4,000. Wow, you guys are doing well. Oh, teacher, the chartered accountant, I'm doing well tonight. Wow, nice one. So now the total fixed cost for this business is 4,000 Ghana cedis. Either they like it, either Fusina likes it, either Mary likes it or not, either Martina likes it or not, Opo, Wumpo, this money must be available every single month in your business to pay for those bills. The question now is that how do you determine how much sales you have to make that profit to pay for this cost? And that's the reason we're talking about break-even point now. Okay? Now, with this same business, they are selling calculators. And the calculator they are selling, they buy the calculator for 25 Ghana cedis. So selling price. No, sorry, they sell it for 25 Ghana cedis. That's the selling price. And then it costs them 15 Ghana cedis to get the calculator. That's a variable cost. So we are using cost price. So let's forget our variable cost now. So it costs them 15 cedis to buy one calculator, and they sell it for 25 Ghana cedis. I want you to calculate their profit, gross profit for me on that product. They buy the calculator for 15 Ghana cedis and they sell it for 25 Ghana cedis. How much is that profit? 10 Ghana cedis, correct. You guys are doing very well. Yeah, I've done it here, so as you do it, I'll just check it. 10 Ghana cedis. Oh, great. Thank you all much. Very much. Thank you. Good. Now, we are going to express this 10 Ghana cedis into percentage to determine every time that they sell one calculator, how much profit do they make on that calculator in percentage terms? And our formula for determining the profit margin percentage is your profit, which is 10 Ghana cedis, divided by the selling price, which is 25 Ghana cedis, multiplied by 100. Please do it for me. We are determining the profit margin percentage-wise. So that we know the gross profit in terms of margin, the profit is just 10 Ghana cedis. We are going to express that into percentage. How much is that? Nice. 40%. Oh, wow. Nice one. I'm happy. We are doing well. Please, just type in the chat box, I'm happy. I'm happy because you're doing well. Type, I'm happy in the chat box. Type it, type it, type it, type it, type it, type it, type it. Type it in there. I'm happy. Grace, thank you very much. Good. Good students. It means if the students are doing well, it means the teacher is also doing very well. Nice. So now we know the total fixed cost. We know our profit margin, our profit, which is 10 Ghana cedis. We know our profit margin percentage, that is 40%. Now, the next level we are going to is to calculate your break-even point. The point at which whatever you sell, you get enough profit to cover for the 4,000 Ghana cedis of your fixed expenses. And this is the formula. The formula for calculating the break-even point is your fixed cost divided by your profit margin percentage. Your fixed cost divided by your profit margin percentage. So our fixed cost here is 4,000. We done it already. We added all the rent, the telecommunication, utility, and all those together. We got 4,000. And then our profit margin percentage-wise is also 40%. So the formula now is 4,000 Ghana cedis divided by 40%. And please, if you are calculating this, ensure that you tap on the percentage sign when you punch the 40. So you punch 4,000 Ghana cedis divided by 40, then you press on the percentage sign. Please do that. If you don't press on the percentage sign, you get it wrong. Okay, so just follow me. So who has done it? Let me see the figures in the chat box. How much did you get? Nancy, do it again. 10,000. Very good. Ajimai, 10,000 Ghana cedis. Wow. Richard too got it right. 10,000 Ghana cedis. Let me see as many people. If you got it right at 10,000, please type it. Yes, 10,000 Ghana cedis. Excellent. Please do that for me. Do it. 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 10,000. Wow. Nice. So it means that we've all got it correct. Oh, somebody got 1,000 Ghana cedis. Please do it again. It's supposed to give you a 10,000, not 1,000 Ghana cedis. You take 40,000, you divide it by 40 percentage. So the 40%, you must add a percentage sign to it in order to calculate it very well. And this for me is the simplest way that any accountant can explain to me. A simplest way. I don't want to complicate it. In fact, I'm not a chartered accountant, so I don't want to go there. So please, all the big accounting guys here today, forgive me. I'm only accountant for only 1 hour, okay? All right. Right, so we all got it 10,000, 10,000, 10,000, 10,000. That's correct. Now, this is the implication. In order for us, for Fusena and Martina and Mary to stay in business without losing their working capital, without making losses nor profits, making themselves happy, staying afloat in business, on the onisika daho, he's happy, they will sleep peacefully, is that they must sell every single month 10,000 Ghana cedis worth of calculators. Any month that they did not sell 10,000 Ghana cedis, they are in trouble. They are going to use their, we are going to do that calculation very soon. They are going to use their working capital to pay for the fixed expenses. So if they started with a working capital is the money that you actually use to run your business, to operate your business, to buy and sell those products. So for example, if they started with a working capital of 100,000 Ghana cedis, and they don't break even based on this calculation every month, it means that if they did not break even to make 10,000 and they make, let's say, 9,000, they'll be short of a certain amount of money to pay for their fixed expenses. But because the company has made a lot of sales because of the 100,000 cedis investment in the business, they will think the business has money. They will take part of that working capital to pay for the bills. So the following month, if they want to go and buy more stocks, they will realize that the 100,000 cedis they invested in the business will be reduced by a certain amount. And many times, my dear friends, from my experience, I'm telling you, not just I've just learned, I'm telling you, from my experience with many of our clients we have worked with, they lose their working capital, the business breaks down, they lose cash flow, they get frustrated because we don't know at what point we pay for the expenses of the businesses. So we use our working capital to pay for all the bills. And usually, this happens between the 6th and the 9th month of your business. By the 6th month, if you have not broken even, your business will be dying gradually. By the 9th to the 10th to the 12th month, which is 1 year, you might be about 50% of working capital. In 1.5 years, in 2 years, the total working capital will be lost. And that is why it is said that businesses start and in less than 3 years, they fail. It's because we don't do these calculations from the beginning. So we start the business anyhow. We start thinking that because you have opened the door to run the business, we are assuming we are doing well, but eventually we fail because we don't even have enough cash flow to pay for the bills in the business. And as a result, we fail. I've been there before. I don't know what I'm talking about. I've seen people who have closed their doors now. Some of them have run away from town. Some of them have changed their numbers 200 times. Some of them have left their homes. Some of them can't even come to town. If they have to come to town, they have to wear baseball cap or wear sunglasses that nobody can identify them. They are in trouble. You know why? Because we fail to manage the business the right way. Forget about all that before stuff. Those ones will pray. You and I will pray. Because I pray for my business every day. Let's do the physical part of the business and then pray on top of it. The prayer becomes the icing on the cake. God knows you are doing the right things in your business. You are doing the science bit of it. You are doing all the calculations right. So that when He blesses you for able to build your business and protect your business, you are safe. But unfortunately, we are neither doing the science and doing the calculation, and we are not even praying for our businesses. That's where we are struggling. So tonight, I'm just helping, all right? And I've done this for many businesses. I'm happy I've done that, and it's helping people. Let's see how this helps us. So now, we know that this business must generate a total revenue of 10,000 Ghana cedis. Now, let us see if our calculation is correct or wrong. So in order to determine to verify if our calculation is wrong, is correct or right, take the 10,000 Ghana cedis and multiply it by the profit margin percentage. And let's see how much money you get. So our break-even point is 10,000 Ghana cedis. And our profit margin is 40%. Okay, so you do 10,000, which is our break-even point in sales, multiply by 0.4. We just change the percentage sign to 4. So 0.4. So if you multiply 10,000 times 0.4, please, how much did you get? Somebody should type in the chat box for me. We want to see if our formula is correct. Multiply your 10,000, which is the total revenue you have to get in a month. Multiply it by the profit margin. You got how much? 4,000. Excellent. And what is our 4,000 here? What does the 4,000 represent as far as our discussion tonight is concerned? Can somebody mention? I want somebody to say it to me. What is our 10?
Cost.
Our fixed cost. So it means that correct.
Fixed cost. Fixed cost.
Fixed cost.
You see? So now it means that our formula is correct. So my dear Fusena, my dear Mary, and my dear Martina, who decided to be the business owners of this calculator business, I beg you, from the first day of the month to the 30th of the month, you must sell a total of 10,000 Ghana cedis. If you don't sell this, you are in trouble. And we'll do a very simple calculation for you to see. Now, let us convert. Now we know the 4,000, the 10,000 is the amount of money of sales you must make. Let us take that to units. How many units of calculator must you sell? Who can help you to determine that? How can we determine the number of units or number of calculators we have to sell per month? How do we calculate that? Who wants to try? Who wants to help me here? How do we calculate? Please raise your hand. Don't speak at random. Raise your hand or type in the chat box. How do we determine the number of units of calculators we have to sell? All right, Aisha, please go ahead.
The break-even cost divided by the cost of the calculator, the selling price of the calculator.
Excellent. Wow. Please let's show some love to Aisha. Show some love. She's done so well. Aisha, thank you very much. Aisha said that you would take the break-even point in sales, which is the 10,000 Ghana cedis, and you divide that by the selling price of the calculator. That means that if you divide 10,000 divided by 25 cedis, which is the selling price of the calculator, you must sell 400 units of calculator every single month. Fusena, and then Martina, and then Mary. If you don't sell 40 units of calculator, I'll fire all of you. You are causing financial loss to your company. I'll fire you. You are not CEOs anymore. So it means that when you open the door every single day, your mindset is that I'm selling 40,000. I'm selling 40,000. I'm selling 4,000. Sorry, 400. I'm sorry. Oh, wow. My target is getting too high. So the target is 400 units of calculators every single month. The day that you sell 400 units of calculators, it means that if you take your profit margin of the total sales you have made, you would be able to pay for all your fixed costs without trouble. You can go back and buy extra calculators and come and sell in your business. This is what I want to establish with you, my friends. This is so important, so important. This is what helps you to stay in business before you even start growing. Now, the moment you achieve your 400 units of calculators per month, or you sell 10,000 series of calculators, and then you move just 1 unit plus the 400, you have started making profit. So if you sell 401 units of calculator, you have made profit. You have covered your costs plus profit. If you sell 400 plus 400 units, which is 800 units in that month, hey, we'll throw party, we'll go to Dubai. We'll go and chill because you have doubled your money. It means that you are making enough profit to take off. You have paid for all your costs plus extra money that you can spend. Never spend at the time when you're not breaking even. It is dangerous. And the starting point is for you to calculate this. Now, the next question that I asked the people in the training the last month that I told you, I asked them if they know about their sales target, how much revenue they have to make. For every single business owner on this call, or the prospective business owner on this call that you are listening to me today, please take this from me. The minimum sales target that every single business must have, minimum, should be the point where you break even. I'm repeating. Your sales target for any business should be your minimum sales target or sales quota or sales goal or whatever target name you give it to it, that you must sell in a month. The minimum should be at the point where you break even. So for this business, their sales target minimum per month should be 400. If they don't meet 400, they must find any means possible to sell it. Otherwise, you're in trouble. But because we are in business to make profit, what most companies will do, which I advise you do, is that you multiply your break-even point value or unit times 2, times 3, times 4, times 5, depending on the capacity of the business owner and the capacity of the skill set and the market attractiveness of the business you're actually operating in. So if I was you, if I was Fusena, if I was Martina or Mary, I would just multiply my break-even point of units, 400 units, times 2. That makes it 800. So my sales target for every single month, at least you can do it for a month or for a quarter, for half year, or maybe for the whole year, depending on your business model, should be a minimum of 800. But if at this point, I would up it up to 1,000. So it means that the sales target for this business, for me, if I was coaching you, I would stretch you and give you a sales target of 1,000 units of calculators every single month. That is your sales target. Now, I'll come to answer a few things. Now, once you have set that sales target of 1,000 units of calculator, and you multiply that 1,000 units by your selling price of 25 cedis, it will give you, that's 1,000 units times 25, it will give us 25,000 Ghana cedis. It means that in revenue terms, your sales target, your revenue target, your sales goal, or your revenue goal, how much money you must generate every single month in your business should be at 25,000 Ghana cedis. That must be written down in the document, share with all your team members to know, and let them know that, guys, if we don't make this amount of money, we are not in business. And everybody must know. If you don't let them know, if they sell 20 units calculators a month, they think they're doing well. No. If you don't tell them, and they sell, you're supposed to sell 400 or maybe 1,000, and they sell 500, they think they're okay. No. You must make your sales target very clear to every single person in the business so that we benchmark ourselves that this month our target is this. And in fact, if your sales team or your people in the business, they're able to achieve that target, that's where bonuses actually kick in. Because now you can comfortably pay for all their fixed costs plus extra money to share. That's it. That's business now. The next thing I want to tell you is that now we know our break-even target, which is 400 units. We have set our actual sales target for the business, which is 1,000 units. In fact, 1,000 is too stretched. You can probably add 100 or 200, depending on you. But I usually want to stretch myself. So I make it 1,000, instead of 400, I make it 1,000 units, which is 25,000 Ghana cedis in a month. Now, once you have broken it down to that level, the unit of 1,000 and then a value of 25,000, you divide that unit 1,000 or 25,000 Ghana cedis value by 4 weeks. So if it's 1,000 units divided by 4, how much do you make? How much are you supposed to sell per month, per week? It means you're supposed to be selling 250 units of calculator a week. So every single week, from Monday to Saturday, you go to work. The target is to sell 25 units. If you divide 25 units by 6 days or 5 days, it tells you how many sales you must make every single day in your business. My dear friends, if you know these numbers, and then you go to sit in your shop, and then you see your salespeople are playing with their phones, they are on TikTok and flipping and doing anything anyhow. Number two, these same people you are working with the company, they don't come to work on time. Number three, these same people who are supposed to help you all to work together to achieve the target, make the money to pay for the fixed cost plus extra revenue and extra commission and extra bonus to give to the staff, they treat the customers anyhow. You will be mad. You will be very mad because the business depends on that number you actually set. And that is where I would come in there now to now start putting some training programs together. You call your team together, you now teach them customer service a bit. You teach them about the product knowledge. What is the product all about? How can they sell it? How do they relate to their customers? The customers who have not come to buy for some time, they have to pick their phones and call them. If you don't do this with your people and you're not working in the business, please don't blame them. You haven't set the right target for them. You haven't set the right track for them. And as a result, they don't know what they're doing. You don't know what you're doing. Everybody is confused and you start blaming anybody else. Me, I'm a victim to that. And I'm going to change. Everyone must know exactly what they're doing in the business. So now, if your target is 1,000 units, and at that month you sold 1,000 units, you only needed 400 units to break even, to pay the cost. But you have extra 600 units. If you multiply 600 by 25, so 600 by 25 gives us extra 15,000 Ghana cedis. My dear friend, you can comfortably take 7,000 cedis or 50% of that, or even 5,000 cedis and share for your staff members and tell them, because you achieve your target, I'm giving you bonus. You are building a culture of a high performance team. This is the power of break-even brilliance. That's what we said. We said break-even brilliance. How can you understand this simple accounting tool, simple business management tool in its simplest form for you to be able to build your business to last? If you don't know this, I beg you, please go do it immediately. If you can't do it yourself, find an accountant. And I told you I'm not an accountant. I'm only an accountant for this, just 1 hour we are here together. That's it. But if you come to us, we can help you. And that's why we are here. At Hypack Services, we help you to know your numbers in your business, to know what you need to do, run your business in such a way that you become a profitable and scalable business. Because if you know this, we can now help you with a strategy to now achieve this target. If you don't know this, you are just now shooting in the dark. You are taking your gun and you are shooting in the dark. You are not hitting anything. You are not hitting anything. You must have a target to hit, and that target you are going to hit is highly dependent on you know the minimum amount of sales you must make, which is our break-even point, and then adding on to make other profit to it.